Hello, everybody. I wanted to go through this return on assets or return on investment exercise here with Mountville. It asks you to create operating income. It doesn't just give it to you. So that means you have to reach back to some prior learning that it expects that you have perfectly updated in your head. And it may have been a minute since you saw that. So let's just review here. Here's our contribution margin income statement. That helps us to get to operating income. So original before the new investment, they have sales of $1 million, variable costs of $300,000. You don't have to calculate contribution margin here, but you could. And then fixed cost of $500,000. So your operating income is your contribution margin minus your fixed. You could just take the $1 million minus the $300,000 minus the $500,000 and get to the $200,000. You don't have to do, in this context, you don't have to do the subtotal of contribution margin. It's not a bad review, though. And then they tell you the average operating assets, which is not $700,000. I have some old data in here. And so what's the return on income or the return on investment? So the return on assets or return on investment, they're used sort of interchangeably, would be your profit margin, your profit measure, in this case, operating income, and your average operating assets, so 32%. Now, what about for the new investment? Well, the new investment is expected to throw off sales of 126. And then they don't tell you the variable cost, but they do tell you the contribution margin here is 60% of sales. So sales times 0.6. Okay. And then they tell you added fixed cost will be $90,000. And so contribution margin minus the fixed cost is negative. That's a bummer. And the new investment is $3,000. And so divide that out. And that's not looking too good. They must have some really good reason to invest in this, I guess. It's non-economic. But there's non-economic reasons to invest, such as a safety issue or a compliance issue where you don't have any choice. All right, so sales with the new investment in it, contribution margin with the new investment in it, and fixed costs with the new investment in it is going to give you operating income of the 185, and your operating assets now are going to be increased by the 6,000. That's it. Now we can do the calculation again. Now we get the 29.55. All right, let me know if you have a question.